Hey, how's it going, investors? My name is Louis Olivier and welcome back to the North Investor. So today I'll share with you what are my top 3 stocks to watch for the month of September 2021. And guys, I am not any kind of financial advisors, so always verify your own investment before to do them. And before to check out what are my picks, let's just take a quick recap at what is the overall situation on the stock market at the moment. First, you guys need to know that historically, September and October are months where the stock market tends to underperform before regaining some strength in the winter. It means that, as you can see, our market indicators are mainly at an all-time high, but it's highly possible to see some readjustment in the months to come. If we compare it with last year at the same moment, we can notice that both the months of September and October had some big readjustment before to regain some momentum in November. However, you need to keep in mind that we are not necessarily in the same global situation than last year. Now, let's jump right into my pick number 1 for the month of September. The first stock that I will present to you today is very well known around the gaming world. Indeed, Nvidia is an American tech company which mainly acts in the conception of graphic processors, cards, and chips for PCs and games console. But they are not only creating graphics processing units for gaming, but also for professional and automated market. There's also many of their technology, such as CUDA, Index, Optimus, and NVAPI, that are available for the tech-driven market. This is also one of the reasons why this stock looks very good for the future of the tech, because the microprocessor sector is in full growth since many years, and the big tech need companies like Nvidia or AMD to grow and survive. An excellent example to illustrate this concept is about the partnership between the Chinese EV company NIO and Nvidia that has been made in January 2021, as I shared with you in my NIO video. All invested into it. And when we take a look more recently, we can see that they have agreed in January in 2021 they have agreed to do a big partnership with the American giant Nvidia. So now it's time to do the fundamental analysis of this stock. So the first thing that we can notice, obviously, is that the stock is trading around $224 per share, which make it pretty much at its all-time high, as we can see over here on the chart. After knowing that this company is in pretty much big growth since many years, we can see that its market cap is more than 550 billion of valuation, which make it more than 5 times higher than what is the valuation of its closest competitor, which is AMD. After, we can see that the P ratio of this company is super high, more than 80. And for those who remember what is the price per earning ratio, you know that when your price per earning ratio is higher than 30, it means that your stock is overvalued. And we also have the earnings per share that are at $2.79 US, which is actually pretty good for this stock. After it, we also have some pretty positive project earnings growth that you just calculate by taking your P ratio that you divide with your estimate growth for the future. So on 5 years, you have 1.51, and the objective is to be above 1. So that's pretty positive on that side as well. And finally, we can see that the return on equity ratio is very good and very high. So that means that 40.38% is the return that the investor have on their investment. We also can see that the revenues are growing very fast since many years now, as we can see here on our 3 years chart. So there's a big growth in the revenue, which means that there is a good health to the company, which has also a very low payout ratio, only 5% of payout ratio, which means that they don't use too much of their money to pay the dividends to the shareholders. We can also see that the total debt on equity ratio is very high, which means that the capital is coming a lot from the debt in the opposition of the capital coming from the shareholders. So they are using a lot of the debt to make the company works. And finally, we have the cash flow, the free cash flow, which is positive, which is also a good news. So this is coming from the profit from the operation after taxes that you just subtract with the investment. So that means that you make more profit on the investment compared to what you invest in the company. So that's also showing that the company is in very good health at the moment. For our second pick, we will stay in the technology sector and we'll see a stock that has been since many years now guided by its founder, Jeffrey Bezos. As you might understand, I am talking about Amazon, which is not only one of the members of the famous GAFAM, but also one of the biggest e-commerce company in the world that also work on cloud computing, digital streaming, and artificial intelligence. Now, as you've been able to see, Amazon is a company that is extremely diversified since the past years and that is acting in many different fields of our economy. But since the current situation hasn't really improved as much as we thought, Amazon is going to be a company that will be to watch because people will continue to buy a lot online in the months to come with the pandemic and the shops that are closing. So Amazon is going to be a big winner from this situation. And actually, now for the fundamentals analysis, we can see first that the stock is trading at a pretty high cost because it costs more than $3.5 thousand US to buy only one share of Amazon. And we also can see that the market capitalization is quite high. It's almost reaching the $2 trillion. And there's not many companies that past this except maybe Apple, but it's really a big company that still actually have a high PE ratio, obviously, but that also has some great earnings per share because the anticipation of growth for this future is going to be very high, knowing the fact that they are really investing and reinvesting a lot of their profits to make the company grow very fast. So that's why actually they don't pay any dividends to their shareholders. And you can see that the 1 year's target estimation is more than $4,000 per share. We can also see that the project's earning growth are very positive and that the PEG is more than 1. And as you remember earlier, as I told you, when it's higher than 1, it means that the company will grow normally. So it's 1.82. We can also see that the return on equity for the investors, they have on average more than 30% of returns on their investment, which is also very good when you see that their revenues since many years has been growing very fast, and it has been increased also by the pandemic. We can also see that the company is using a lot of their debt to finance compared to the equity, to finance all the different acquisition that they needs to do. So that's something that to watch because the debt equity ratio is very high. And finally, we have a very good news from some leverage free cash flow that is positive and that is almost at 17 billion of US dollars. Now, who doesn't know the restaurant with the big M? Let's see another stock that is worldwide known for being one of the most popular fast food restaurants in the whole world. Personally, I'm not a big fan of the meals that they're proposing there, but I can't deny the fact that this is one of the most important brands in the food sector that has seen an impressive growth since more than 50 years now. So I'm not gonna go too much in the detail of the company because most of you guys already know it. So let's jump right into the fundamentals of this business. And guys, just before to take a look at the fundamentals of this company, let's just see why would I buy this particular stock in September. First of all, the first thing we can notice over here is that the operating profit margin that comes from the increase of sales has increased of more than 43% over the past 6 months, which obviously show that this company is in very good health even if we are presently in the pandemic and that many things are still closed over here in Quebec and in Canada. So that shows that you can go to the drive-thru, for example, and go buy some home delivery stocks from McDonald's, even if everything is closed. Another thing that is interesting to see is that McDonald's dividend payment has increased since the past years. And for all the dividend lovers that I have on this channel, I think that McDonald's is a great way to receive some fixed income from the dividends from them. And this is obviously a reason why this company at the moment is probably at its highest peak of maturity. And I think that maybe in the future years, so maybe in the 10, 20 years to come, maybe there will be some readjustment because the company might go down a little bit compared to what we've seen since 50 years. But I think that at the moment, this stock is still very a good keeper for people that loves the dividend investing. The first thing we obviously notice when we look at the fundamentals is that the stock is trading around $238 per share, and that the market cap is quite lower than what we've seen with the past two stocks from Nvidia and Amazon, but still 178 billion makes it quite a big valuation, so it's still a very big company. Obviously, the advantage that this stock has on the others is that the P ratio and the earnings per share are both superior to what we've seen earlier, with a P that's only 25 and earnings per share of 19, almost 10 US dollars per share. So that shows that obviously it's about the sector in which they are evolving. So McDonald's has still some growth potential, but on the long term, I think that both Nvidia and Amazon might grow faster than McDonald's, but the advantage that McDonald's has on them is the dividend. So they are offering some dividends to their shareholders, so people that likes to have some passive income. You can receive a little bit more than 2% annually on your investment, and the 1 year's target estimation on that point is of around 265 US dollars per share. Now, looking at the project's earning growth, we see that at the moment it's still positive. It's higher than 1, which means that the earnings growth that are estimated on 5 years will technically grow, but we've seen that it's quite lower than the 1.89 we saw with Amazon. But still, it's a great news on that side. We see that the profit margin and the operating margin are also positive, which is also some great news on the profitability side, with some 11.13 returns on the assets. And the thing is that with McDonald's, we see here that the revenue are 21.74 billion, which is good, but we've seen in the past 3 years that there has not been some great increase compared to both Nvidia and Amazon, but this stock is pretty much staying the same on the revenue side, which is not necessarily a good news on that side. And we can also see that the company has a lot of debt, so it almost has 50 billion of debt. And when you know that the company technically worth around 200 billion US dollars, it means that the quarter of the worth of the company is in debt. So that's not necessarily too much, but it's still a lot of debt that is used to, for example, pay the shareholders. But we see that the payout ratio is quite good, so only 55%, which make it pretty much in our estimation between 35 and 55%, which is what we are aiming to have of a payout ratio. So that means that the company is able to pay the dividend to the shareholders. And finally, the free cash flow is positive, which is also a good news compared to our investment that are made in this company. Even if historically the months of September and October tends to underperform on the stock market, I personally see it as an opportunity for you guys to buy some stocks with a certain discount. So obviously this is my personal point of view, and as I told you earlier, I am not any kind of financial advisor, so always make sure to do your own research before to purchase and to do your own investment. And guys, if you like this new kind of content, I invite you to let me know in the comment section what you think about this new kind of format of content. And also for everyone that is new on the channel, you can join the North family by subscribing to the channel for only $0.0, and it's totally free. And also for everyone that wants to understand how you can invest on the stock market, I invite you to go check out my latest video on how to analyze a stock. This video is just going to be right over here, and I will see you there.